Good morning. It's Jeffrey Christian from CPM Group. It's about 10:05 on Tuesday, May 3rd in New York. I wanted to talk about gold and silver and what's happening and what's likely to happen this week. There are two big factors, I think, that are critical and could have dramatic impacts either way on gold and silver prices. One is interest rates, and the other one is the increased fighting in the Ukraine. We've seen, if I can move here, these are gold prices in recent times. So the chart on the left goes back to 2019. You can see the beginning of the upward move in prices in the middle of 2019, for the increase in the middle of 2020, and the fact that the prices moved kind of sideways ever since then. The chart on the right just takes it back to 2011, so you can put that into a slightly better, more historical context. Now, focusing on interest rates, the FOMC is meeting today, the 3rd of May, and tomorrow, and it will make an announcement on interest rates. We have seen the financial asset prices fall sharply over the last 8 trading days or so, as financial markets have focused on the idea that the Fed may raise interest rates 0.5% instead of 0.25% at the end of the FOMC meeting tomorrow. And the Fed has signaled that it would probably do that. And that assumption in the financial markets have caused the prices of gold and silver and other commodities and oil and other metals and stocks and bonds to all fall sharply in the anticipation of a much more militant FOMC. Now, an interesting development was the release of the first quarter real GDP figures last Friday, which showed a negative 1.4% decline in US real GDP. There had been an expectation that real GDP would be really low. We were in a group of economists who thought that it might be like negative 0.4%. People have nastily pointed out to me that other groups of economists had thought that it might rise only 1%. But the reality is that real GDP looks to have been much weaker in the first quarter of 2022 than had been anticipated. That, coupled with the increased fighting in the Ukraine, actually could cause the FOMC to be a more cautious, less militant approach toward inflation at its meeting today and tomorrow. So right now you've seen the gold price and silver prices fall sharply, largely because of the anticipated increase, more dramatic 0.5% increase in interest rates expected to come tomorrow. And when that comes, you should expect some volatility, perhaps to the downside, in gold prices. We have been saying for some time that we could see 1780 in the gold price on a spike down in the second and third quarters of 2022. It is halfway through the second quarter, or 1/3 of the way through the second quarter. We are seeing downward pressure on the prices. Price has fallen down to around 1860 as we're speaking. So 1780 is within striking distance. You have to be careful though, because if the Fed decides that given the weaker economic activity and given the increased fighting in the Ukraine, it wants to be a little bit more cautious, and it pivots back to its earlier stance that it was likely to would be likely to raise interest rates only 25 basis points. If the Fed comes out tomorrow and says we're increasing our interest rates 25 basis points instead of the now anticipated 50 basis points, that could cause gold prices and silver prices and other financial assets to pop up sharply. So you've got a very volatile situation. You've had the prices of all financial assets hammered down by expectations of higher than previously anticipated interest rates. And we're now in the trenches waiting to see what the next shot is. If it's a 25 basis point or a 50 basis point shell. And depending on how that shell turns out to be tomorrow, we could see gold prices and silver prices rise sharply on a spike or spike lower. Similar, the other factor that's going on is the increased fighting in Ukraine. May 9th is called Victory Day in both Ukraine and Russia. It marks the what we call VE Day, Victory in Europe Day. The West marks it as May 8th, but Russia and Ukraine and other former Soviet republics mark it as May 9th because the peace actually came at midnight in Germany, which was midnight May 8th in Germany, but it was after midnight in Russia or the Soviet Union, so it was May 9th. And, you know, originally Putin wanted this war over within a week or so, and he was going to have a great May 9th celebration of Russia's victory over Nazis, both in 1945 and in 2022. Well, that didn't happen. So then he said, let's try to really conquest and conquer the eastern part of Ukraine by May 9th, so we can celebrate the de facto annexation of eastern Ukraine. And that hasn't worked out very well. So now he's probably, you know, the US government saying that he's thinking that he'll just declare war on Ukraine on May 9th, which will allow him to call up conscripts and put the entire Russian economy on an even more martial law type of situation. So he keeps backing up. But the Russian military is throwing a lot of assets at trying to take over Mariupol and completely dominate it, and take over as much territory in eastern Ukraine as possible by May 9th. The Ukraine government and military know this, and they have, starting really on the weekend, but getting much more intense yesterday, mounted major counteroffensives, both within the eastern Ukraine, within bordering areas within Russia, and in the Black Sea, where they sank two patrol boats yesterday. So both the Ukraine military and the Russian military are stepping up their fighting and their offensive moves this week. Again, this could cut both ways. Russian victories could cause gold and silver prices to be relatively higher. Ukrainian victories and resistance in Mariupol and beating back Russian forces in Eastern Europe and having some more successful strikes on Russian military installations across the border in Russia could actually cause a reduction in the war premium in gold and silver and contribute to the lower prices. Put that all together and you've got a pretty volatile, uncertain economic and political environment that gold and silver are facing this week. So this week is going to be pretty much of a critical week in terms of determining shorter term trends in the markets. Those of you who have watched these shows, videos in the past, recent past, know that we have been saying that we thought that gold and silver prices would show some weakness and would basically move sideways during the second and third quarters of this year, possibly starting to move higher in the fourth quarter. That is still our view. We will be having the April inflation figures coming out for CPI, not this week, I think maybe next week, maybe the following week. And that could actually be very interesting in a negative way for gold and silver bugs, because it could start to show, you'll be measuring April inflation, you'll be measuring April price levels relative to April 2021 price levels. And by April of last year, consumer prices had started to rise. So you may see lower percentage increases in prices in the CPI data when it comes out. So there are a lot of things that are going to be happening here that could lead that. I've had people ask me, You know, we have been saying for some time that we thought that there was a recession on the horizon. Our best guess was 2024, 2026 in that area. We have said that it's possible that it could start in 2023. There are any number of economists or economic units at various banks and other places that have said, yes, the recession could occur in 2023. Our view has been that that's probably still unlikely, that there's probably a lot more economic strength inherent in the US and in other economies that could keep things going into 2024. But we do see a recession on the horizon. We don't necessarily see it in 2023. We see 2023 being a transition from this period that you can see on these price charts, where the gold price has been moving sideways really for almost 2 years now, and the silver price I'll show you in a minute similarly, that 2023 could be a transition away from this consolidation period into another period of higher prices. So if you think like a technical analyst, and you can see the price move from $1,280 in 2019 to $2,080 earlier this year and in August of 2020, and it's been consolidating between, say, 1,700, 1,680 and 2,080 since then. If you think like a measured move, then you might be looking for another $700 move upward in the gold price once we break out of this consolidation period. That's if you're a technical analyst. We tend to look at technicals for timing moves, but we price, our price expectations are predicated on a macroeconomic and international political analysis and a microeconomic understanding of each individual commodity that we look at. Gold, silver, platinum group metals, tantalum, manganese, molybdenum, oil, they all have different fundamentals, and we look at the microeconomic view. So we'll look at something, for example, like mine production and capital expenditures and projected developments of new mines and new capacity coming on stream compared to old capacity coming off a stream and things like that. So our view pretty much is still the same. Price has been weaker than we thought it would be over the last 2 weeks. And that reflects the fact that the Fed has been more militant in its pronouncements than it had anticipated being up until about 2 weeks ago. My third gold price chart is just the long view. And this goes back to 1968 when gold prices were freed to float. And you can see the price was $35 an ounce, rose to $42 an ounce when we closed the central bank window in the US Treasury. And you can see the big upward move to $616 on an annual average basis. This is actually monthly average basis prices. Price got up to 850 in 1980, came back off, traded sideways in a very long consolidation period before moving up to a new record in 2011. Came back down, consolidated, it's moving back up higher. So it's interesting because, people say, why are gold prices so low? Well, if I look at these three charts, I don't necessarily see gold prices low. I mean, on a very short-term basis, yeah, they're low compared to where they were at the outbreak of the Russian invasion of Ukraine. On a quarterly and annual average basis, they're probably at record levels. If you take a slightly longer-term view, we are way past where we were when we were at record prices in 2011. And if you take a long view, we're way, way, way past prices back then. And back here, I'll remind you, in November of 2000, CPM Group issued a buy recommendation in gold at about $270 an ounce, saying that we thought that the economic and political environment going forward over the next several decades would be much more hostile than it was in 1978, 1979, when the price went from $200 or $190 to $850 and then came back down. And in 2000, we said, we think that the economic and political environment for the next several decades will be more hostile than it was back then, and that the gold price will move far beyond $850 an ounce, as we saw what we called a gold renaissance on the part of investor attitudes toward gold, saying that investors were changing the way they thought about gold and the way they viewed it as part of a diversified portfolio, and that you would see a upward shift in the investment demand curve with more investors in more parts of the world buying more gold at higher prices for a longer period of time than you had ever seen before in history. And between 2000 and 2022, we have seen that, and it's probably going to continue. And we also said back then that at some point central banks would join in, which they did on a net basis around 2008. So that's sort of the long view of gold. Silver, similar. It's interesting. Again, you see the price. People, why isn't silver $30 or $50 or $750 or $1,500? All of these prices I keep hearing from, strange people on the internet. Well, the silver price is high, and you see that, it was down around 12. Well, it was around $15, $16 for several years there, from 2015 through 2019, and it has moved significantly higher, and it's in this consolidation phase. So a little bit of perspective. Now, people say, well, yes, but it spiked up to $49.90 in April of 2011, and then it came back down to $32 the following week. And we did see the price show some strength in April, and now it's come back off. But it's still relatively high. It's not as high as it was back then, but it's relatively high. And then if you look at it on a long-term basis, and I apologize for the quality of this photo, it was lifted from our 2016 Silver Yearbook. This goes back to 1975, which was about the time when the Treasury had gotten rid of most of the silver that it had in circulating coinage and all. And the silver price was sort of free from the encumbrance of the US Treasury's involvement in managing the price, which had gone on from like the 1870s until the 1970s. And we saw the silver price spike sharply higher, along with gold and oil and a lot of other things, 1979, 1980, came back down, spent a long time in the wilderness. Now that's a consolidation period. Rose again starting around 2005, 2006, little lag to the gold price rise. Got up to highs in 2011, came back down. And again, this only goes to 2016 or 2015 because it's from our 2016 yearbook. I apologize, but we all know that it's back up here around $22.60 today. So that's silver. And these are real and nominal prices, just to show you where we are in terms of the inflation adjusted silver price. Not that you can believe the inflation numbers. Of course, if you do know anything about economics and government math, you would believe the inflation numbers. That's never from talking on the internet has it. Our Silver Yearbook due for release on May 10th. You may order the yearbook at our website. You may go to webinar and register. We will have an online briefing for the Silver Yearbook on May the 10th, and you may register for it. It's free and open to the public. These are the sponsors that we have lined up. We have several other companies that are considering becoming sponsors, but these are the sponsors that we have so far. In terms of partnership on the Silver Yearbook, we have the Huatong Silver Exchange in Shanghai as our partner for the Silver Yearbook. They translate and distribute the Silver Yearbook in China. So we have a number of sponsors, growing number of sponsors, and as I said, we have several other companies that are considering it at this time. I will be in Vancouver for the Vancouver Resource Investment Conference on the 17th and 18th of May. It's still a tentative schedule. I'm planning to talk about gold and silver supplies, reserves, and inventories, and put some truth to the lies that you see. Yukon Mining Alliance wants me to make a presentation on gold, which I'll gladly do. There's a panel discussion. I think it's supposed to be on silver. Sam Carey, one of my colleagues, is going to be presumably on another panel discussion. And I have offered to be on other panels, for example, on capital formation and some of the changes in institutional investor attitudes toward the mining sector, which is constraining capital formation in the mining industry with long-term negative implications for supply and positive implications for price. We have tentatively asked for space to have an open forum, question and answer. We're waiting to hear from Cambridge House, which organizes the Vancouver Resource Investment Conference, about it. You may register and attend at that website linked below. And again, you know, we have the VRIC. We will have an open forum for clients on May 25th. We'll have the Silver Online Seminar in advance of the Prospectors and Developers Association of Canada conference on June 1st. Go to our website and find out all sorts of stuff. So that's it. I'll come back to you probably on Friday unless something happens that precludes that. In the meantime, take care, be careful, and keep your hands clean.